Hello, Tom Rooney, CEO of Waterfind. At Waterfind, we get a very unique view of what's occurring with water resources and forward outlooks about what might be occurring. We look at this with great interest as water prices and water availability is going up and going down. It makes a change to where we structure and put our resources within the business to help our clients. So I thought it would be useful to share our insight into the marketplace. Predicting the last megalitre that's allocated is very, very difficult for us, but we do see these sort of general trends through the market. Well, national allocations this year were low, as many of you will understand, low for major and also minor allocation types. Some of the allocations, particularly the high security allocations, did record stronger allocations to them, as they normally do every year, because they get the first group of allocations that are occurring. Nationally, there was about 7.3 million megalitres allocated in the whole market. The Murray-Darling Basin, which is still the major water market in Australia, actually recorded about 3.1 million megalitres of those available allocations. That 3.1 million megalitres represents about 26% of the total available allocations in the Murray-Darling Basin. So a very low allocation year when you take into account all the entitlement types that could be allocated in the Murray-Darling Basin and the fact that that's the largest water market in Australia. So just to give you an example of how low that was, it's one of the lowest allocations that's been recorded. If you look at the heat of the millennium drought, which was the 2007-2008 season, there was a bit over 2 million megalitres, or about 2.1 million megalitres allocated to the basin. That's from a low side. From a high side, in the 16-17 irrigation season, we saw over 11 million megalitres allocated to the basin. So 3.1 million megalitres allocated to the basin is definitely at the very low end of what we've historically recorded. Those lower allocations meant that we did record higher prices for the current irrigation season. And there is a continuation between lower allocations and higher prices. And we've seen this correlation exist ever since water markets started 20 odd years ago. So temporary water prices recorded some of the highest historical prices in the peaks of this season. And the peaks of this season really followed the driest months or the hottest months of this irrigation season. Not that it always does that, but certainly that this season that's what occurred. The only season that really trumped this current season was in that heat of the millennium drought in the 2007-2008, where we did record lower allocations than we saw this season. And we also had some very unusual announcements, policy announcements occurring, and drivers in that temporary market that peaked that market well over above $1,000 a megalitre. Temporary water pricing in some of the key water markets did get to that 1,000 plus per megalitre mark again this season. But when we look at the current average price of this season, it was averaging around the $500 per megalitre mark, and that's looking at all trades that have occurred so far this season, weighting them and putting an average price to it. So that's temporary pricing. Let's look at permanent pricing. Permanent pricing continued its run this season, and really since 2015, permanent water pricing has this dramatic run of inflation occurring in its capital value. That's been led by some of the high security water rights, and as the drier cycle came through, we normally experience this where we get a heavier demand on the high security water rights when there's drier times because they deliver better allocations. Yet since 2015 there's been over a 200% increase in the value of those permanent water rights. When we look at the peaks of this season, there was a 25% increase in the value of high security permanent water rights, which really went to around that January-February period. So certainly a continuation of inflationary pressures with high security water rights occurring this season. What's very interesting though is just what's been occurring since the rain's been changing, since the economic confidence has started to wane somewhat because of COVID-19. And what we've seen there is we've actually seen one of the first corrections that have occurred in permanent pricing, in particular permanent high security pricing. Those corrections started earlier on in the irrigation season, and that was really as a result of the continuation of a number of years where some of those general security water rights received very low or even no allocations, and there was more sellers coming into the markets as they were selling those permanent water rights to really recapitalise their farming businesses. What we're seeing now in the last couple of months, however, is an early indication of a potential 10 to 20% drop in the high security water rights. Some of that has already occurred, and we see a continued pressure on that as the demand has been lightening off for those high security water rights and shifting more to the general security water rights. What's also occurred is that high security water rights have been an entitlement which a lot of water investors and these water investment firms have actually been interested in buying, because it receives an allocation. They can use that allocation then to get better returns or annual returns on the money that they've put out. As those economic conditions of some of those water investors have been changing, the confidence in the general economy being down, it means that they've probably have less capital to be spending in those permanent water markets. So their demand softened off from those permanent water rights. I believe, and my personal view, is that the peak of the market that we saw for general security water rights was more of a supply-driven turnaround, where we had more water coming to the market, and the high security water rights, it's been more of a demand-driven turnaround, so less demand for those water rights. Also, what we've seen is general farmer demand softening off from those permanent water rights and actually thinking about the changing weather conditions, and that those general security or the lower reliability water rights might actually yield something next year. We expect they will. That means that when you look at the allocation that's delivered on those, they're getting better bang for their buck on a lower reliability water right.